Would you like a pay raise? How about a pay raise for doing nothing other than holding stock? Want to know about 3 awesome dividend raises that recently came in that may have increased your passive income? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Feber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. The last year has been really difficult for the whole world. Getting a pay raise during a period in which just keeping a job is a blessing? Not easy. Well, how about getting a large pay raise? How about a series of large pay raises for doing absolutely nothing at all? That's what being a dividend growth investor can do for you, as it's done for me. I've been investing in high quality dividend growth stocks for more than a decade. It's radically changed my life. Using the dividend growth investing strategy allowed me to retire in my early 30s. And I did that after growing up on welfare, going without a college degree, and never having a high-paying job. Dividends now cover my bills. Better yet, these dividends are growing year in and year out all by themselves. That's because the companies I'm invested in are regularly increasing their dividend payments to their shareholders. I don't need to ask anyone for a pay raise. In fact, I don't need to do anything at all. I just wake up and there's more money. Being a dividend growth investor is the easiest job I've ever had, and it's also the most rewarding, as I'm about to show you. Here are 3 recent dividend raises you need to know about. The first dividend increase I want to tell you about came from Coca-Cola Co, stock ticker KO. Coca-Cola just increased their dividend by 2.4%. Sure, that's not lighting the world on fire, but let's get something straight here. It's more money. I don't know about you, but I've never turned down more money, especially when I didn't have to do anything for it. Back when I still had a job, getting a 2.4% pay raise was a noteworthy event. But getting this pay raise from an investment that required me to do nothing other than hold the stock is a lot easier than showing up to work for 50 hours per week. This is the 59th consecutive year in which Coca-Cola has increased its dividend. Try getting 59 pay raises in a row from a day job. This is a dividend all-star. While the stock doesn't look cheap right now, which is why I've not yet highlighted it on the channel, it's a good business to hold on to if you got in years ago. The second dividend increase you should know about came from Essex Property Trust Inc., stock ticker ESS. Essex gave their shareholders a 0.6% pay raise via their recent dividend increase. We actually highlighted Essex in a video back in October when the stock was around $200. The stock is now almost $270. It's not as attractively valued as it was when I first brought it to your attention, but this is a phenomenal business. Essex has now increased their dividend for 27 consecutive years. That's very impressive. There aren't many REITs out there that have a longer track record than this for dividend growth. While the dividend increase was small, it's coming during a very difficult period for society in general and the business specifically. I'm cutting them some slack here. Unlike a lot of other REITs, they didn't cut the dividend during the crisis. That speaks volumes. This is the kind of stock you buy, then hold for decades. The third dividend increase I want to go over came from the SherwinWilliams company, stock ticker SHW. Check this out. SherwinWilliams just increased their dividend by a jaw-dropping 23.1%. That marks 43 consecutive years of dividend raises for the company. And what did shareholders have to do to collect this amazing pay raise? Nothing. Just hold the stock. SherwinWilliams' stock price is up almost 750% over the last 10 years before reinvested dividends. That's up there with some of the high-flying tech names. The growth profile of the underlying business is propelling much of the stock's move. For example, SherwinWilliams has increased its earnings per share by more than 5-fold over the last decade. Simply put, it's a truly wonderful business. This stock might not look cheap at first glance, but a lot of basic valuation metrics aren't far off from their respective recent historical averages. If you haven't taken a look at SherwinWilliams before, now might be a good time to do so. This is a top shelf dividend growth stock that will only better your portfolio. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these dividend raises. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over at Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.